What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 29th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we're going to talk about the incredible aftermath of the recent FOMC meeting on cryptocurrency markets, rebounding to the highest price range here for Bitcoin since as far back as June 13th. And on top of that as well, seeing Ethereum and the broader altcoin market surging higher. So, this begs an important question. Is there still time to benefit from the clear relief rally that we're in right now? Or is it time to pack our bags and expect lower prices? I'm going to be talking about that as we go throughout today's video. But I want to kick off here in the conversation with talking a little bit about getting caught up in extremes. A lot of people can tend to get caught in the emotions of markets. And many people believe that when we get into lower territory here, and that, for example, we're going to continue going down constantly. The price is just absolutely going to start collapsing lower. And that's what many people thought here going into the CPI numbers released back here on July 12th. And a lot of people as well are going to get caught on the other end of the stick. When we start to trend higher here, they're going to think, oh my gosh, this is the absolute bottom. It's time to rip higher and go back to the previous all-time highs. And as we've been trying to emphasize here, the past few weeks, as much as we believe there's a chance we come back down to the previous lows, that markets will crater back down at one point or another, considering the macro environment, and this goes with equities as well, that it's not good to think in extremes and that there are likely periods of relief rallies. You guys can see here many of the videos over the past 2 weeks have been talking about this, even though at the same time we've also emphasized the idea that there is still a lot of overcoming challenges in the longer term picture. This is really what we've been talking about for the past month here on the channel. And it's been focused on this idea, if you go back through a lot of the previous videos, that we've started to show the signs here for a short-term relief rally. We do not want to get caught thinking in the extremes that even though we may believe we'll come back down to the previous lows and maybe even go lower for crypto assets, it doesn't happen overnight. And there are periods of times where you can get short-term relief in the market that's usually sparked by people buying the dip and having all of the sellers who wanted to get out over the past few months out of the market, leading the dynamic of having more buy-side pressure than sell-side pressure, therefore driving up prices, and also the effect of short squeezes. When people who are trying to short the market have to cover their short position, they have to repurchase back the position that they were effectively selling on the market and hoping would go down in value in order to repurchase it. In many cases, it goes the opposite way. People get too bearish here and they get forced out of their positions. And that's exactly what's happened here. All the people who had built short positions here are now underwater, if not about to be forced out of their position if they haven't already. And that is going to create all the pressure needed to get up to the range here of around $27,500 to $30,000, giving us a chance here as the 200-day moving average and the 200 EMA start climbing lower to potentially yet again service as short-term resistance. And that is what the concept of a relief rally is. It's not essentially a bottom in the market, as many people are going to think it is. It is rather a relief rally, a temporary window of patience and kindness in the market where valuations start to come up here and get people second guessing themselves, thinking, oh my gosh, we're up here, we've trended higher, we're back at 30,000. Could this be the bottom in the market, right? And that's exactly what many people thought back here. If we just take a look back, as we revisited back to those all-time highs here and actually set a new all-time highs for a brief period of time, many people thought in this period, oh my gosh, we're about to whipsaw higher here and go up towards around 100,000, maybe even $200,000. And of course, we didn't get that here. Lessons learned from the past here. Many people fell for it, including ourselves, but we have to be able to look back at the past and think about how does it relate to where we are now. Right now, we are seeing a typical, common relief rally in markets. And the same goes here for other assets with the upcoming potential merge event in September, where Ethereum will move to proof of stake from its previous consensus mechanism of proof of work. We are now back into territory here that, in my opinion, is starting to get into the profit-taking zone, right? We're at around 1,700. To put that in perspective, we were just at 800, I think around $850, roughly speaking. Or sorry, a little bit higher than that, $880 back here on June 18th. A little less than a month and a half, we've been able to see Ethereum's price practically double in this period of time. Now, I understand the momentum is strong, and now a lot of people are, again, falling into the mindset of, oh my gosh, was that the bottom back there? Is the merge going to carry ETH to potentially $3,000 or $4,000? Is it going to take us back to all-time highs and surge higher? Are we going to kick off the next bull market? I don't want to miss on it, right? No one wants to miss that. And this is the exact trap that larger players who know what a relief rally looks like, what it smells like, you get what I'm saying here? Like the kind of feeling, street smarts of picking up and knowing, oh wow, people are getting caught on the other extreme. The people who were shorting the market, who were betting heavily against it, who now got forced out of their positions, they're now revenge trading. And they want to make up for the losses that they previously made, just like they were when they were trying to short. Many people who were shorting the market were people who were also euphoric during the bullish period and didn't take profits along the way. And it's a repeatable mistake that people fall into, a consistent trap in financial markets that people in the smart money bet you will fall on. Now, I'm not saying you specifically as the viewer here. I don't mean to generalize, guys, but I'm talking about the broader market here. And if you can't learn to realize that as we move up into these moving averages, a typical range where people start to take profits and the sellers outweigh the buyers, if we can't start to take profits along the way within this range and be disciplined and not get too greedy, we are going to get caught holding the bag back down. And worse off, sometimes adding to our positions at these ranges. The question I always ask is, when you're thinking about an investment thesis in some kind of asset, take Ethereum, for example. If you liked Ethereum at $19,000, $2,000, or excuse me, $1,900 to $2,000, you should have really loved it at $800. What's really changed fundamentally? Outside of the fact that the network upgrade is coming a bit sooner than maybe some people expected back here, nothing's changed. I would much rather like to buy something 50% off from where we are now. I'm looking slowly but steadily, not immediately, right? We have some exposure to ETH. We're not looking to sell it all right away, but we're looking day by day, potentially an equivalent of 10% off of our position here because it's moving up quick and we want to take advantage of that higher price range here for Ethereum so we can mitigate a lot of the losses or paper losses that we had here for the past few months and realize more gains here. Take a look at that ETH BTC ratio, guys. Lots of strength coming in here. I understand it's easy to get caught off guard with this potentially being a swing up for the next bull market, but we're getting up to a range here where time and time again, back here in May, as well as here in January 2022, and even sometimes throughout 2021, where sellers start to outweigh buyers here. I wouldn't get too confident going into this range here. Right? And again, when we take a look at the NASDAQ here, we've had a target range on the newsletter for the Dash report around 13,500. And it looks like, just like last time, we are going to come in between that 200-day as well as the 200-day EMA. And just like that, we are starting to bolster higher here. We were able to turn previous multi-month resistance into new support, and we are polarizing higher here for the price action. And I think it's going to continue to climb up higher. I think we're going to continue to climb up here towards around 13,500. But you can bet your socks, essentially, I'm not going all in at this price range, right? The market's already rallied a good amount. We've been taking advantage of the strength in this market. And sure, we might have some trades here, but they are going to be short term. They will not be long-term additions. They will not be things that if it starts to roll over on my entry, I'm going to go, oh, I'm in it for the long term, right? No, I'm going to be very protective of my capital, as should you, right? I'm not saying you guys have to follow my trades exactly, but anything that you do, either you should have stop losses or have mental levels where you know you are going to sell your positions so you can hedge yourself, you can protect yourself. Don't take too crazy or too risky of trades at this range. Make sure to protect and preserve your capital. Take advantage of the momentum, selling, maybe potentially existing positions that you have, or making short-term trades on the confidence and the resilience in the market, and be ready to take profits. Now, another one thing I wanted to talk about, because I know a lot of people are genuinely asking, okay, Nick, like, you believe that this is a relief rally, that there is some short-term confidence in the market, and maybe, hey, even still some money to be made. what do you think about the broader altcoin market? Well, one of the things we've been emphasizing for the past couple of weeks is the dilemma that a lot of people have about wanting to chase a lot of the different altcoins in the market rather than just betting on Ethereum. And while I wouldn't say to go all in on Ethereum, to be honest, you're going to be hard pressed to find plays that are outpacing Ethereum in this market. So I'll go ahead through a few examples. For example, we've got Solana, favorite pick from a lot of people. We had someone on our mid-month webinar back here on July 15th ask me about whether or not I liked Solana at these levels. And what I emphasized is that, look, while Solana might go up in dollar term values, take a look at its Solana ETH ratio, right? Take a look at the ratio against Ethereum here. And we can see that since back here on June 24th, when we really had a lot of the altcoin market weighing out better than ETH and BTC, now it's starting to weigh down against Ethereum. It's not leading here. And during that period of time, all the while Solana might be up in value, since we talked about them in the webinar, it has underperformed ETH by 19%, roughly speaking. That's gains that aren't being made here during the relief rally. And it's the same story here for a lot of the other alternative layer 1 plays. You can see the same here for Avalanche. Avalanche down here as well, since back here on the 24th of June. Over a month of decline here against Ethereum. Again, might be up in dollar terms. It's not outpacing Ethereum. Take a look at ADA, right? Cardano, one of the favorite layer ones that I know many of you out there are tracking outside of Ethereum. It has been down here routinely since June 13th. And it looks like it might be ready to dip below the deviation of its standard channel here and come down here towards around 0.002 to 0.0022, right? Somewhere around there, essentially, that's going to give us a much better discount to Ethereum for Cardano. And there's a pretty clear reason for this. Even if there is optimism around the merge, it's going to be around Ethereum, right? It's an Ethereum network upgrade. And that's going to make Ethereum much more scalable and much more attractive long-term than these other networks. Now, of course, the merge doesn't bring about immense amounts of scalability. That comes through later upgrades. But if Ethereum gets through this next step, then it's more likely than not that it's going to be able to get to the next few steps, or at least shows that it's making progress towards its degree of scalability that is going to come through the eventual steps of the Ethereum network upgrades. So an important thing to keep in mind here, no reason to trade these plays right now. It makes them more irrelevant, to be completely frank. Now, one of the other plays that have benefited in this market that we talked about is Ethereum Classic. Now, a very odd play here. To be honest, I would never hold Ethereum Classic long term, but Ethereum Classic has been surging against Ethereum. And this is a play we had watched for some time because of the fact that a lot of the miners on the proof of work network, the core Ethereum network right now, could potentially switch over to Ethereum Classic, as Ethereum Classic is staying on proof of work. It is not moving to proof of stake. And as we can see here over the past week, it has made a 60% move against Ethereum, which has already been surging higher in its dollar value. Take a look at other solutions here. Layer 2 scaling solutions like Optimism that are on top of the Ethereum network and have its own token. Since back here on July 17th, it's been ripping higher here against Ethereum. And we've also got Uniswap here that has, again, been leading the way against Ethereum since as far back as May 12th of this year. Now, am I telling you to go out and buy these plays? No. I would say at this point, unfortunately, the leaders that have held up against Ethereum, we have seen them now. It is likely getting towards its end here. And I, again, want to emphasize that because many people think, now, hey, Nick, come on, we're in a bull market. We're in an extended relief rally. This can last a couple months, right? Unfortunately, it's not going to last very long, guys. Things are going to happen very quickly. We're getting a short squeeze. We're getting a lot of the buyers' euphoria coming into the market here that you typically find in a relief rally. And sure, maybe it will test a little bit higher here. But I can't emphasize it enough that you have to be protective of your capital at this point. We have recouped a lot of losses for some of these altcoin plays in the DeFi ecosystem coming up against their losses in Ethereum. We have to take advantage of that. Now, I want to go ahead and take a look at some of the data science models here from our partner, CryptoQuant. So the two models I want to take a look at here are the net unrealized profit and loss, as well as the MVRV ratio. To run through these quite quickly, the net unrealized profit and loss essentially tracks the net unrealized or basically not materialized gains or losses of people on chain. Essentially, taking a look at the unspent transaction outputs and understanding where price was when they were last moved. And this gives us a good gauge of understanding when the market is overbought or oversold. Essentially speaking, a lot of people have been turning to this model, as well as the MVRV ratio, which essentially is taking a measurement between market cap and realized cap, to see whether or not the market is overbought and oversold. And as we've emphasized for the past few weeks here, it has been an incredible metric to find good discount opportunities in regards to dollar cost averaging and maybe starting to build long-term positions. But it's important to note that we have stepped outside of this channel. And while a lot of people think that, just like through the past, in the majority of cases, that this is going to mean that we're kicking off the next bull market, that we're ready to start just going vertical and moving higher, I would emphasize two key things. One, we really haven't had a prolonged period of sideways accumulation. We did have about a month's worth, but that would be one of the shortest periods of time we've had in Bitcoin's history. And not to mention, the bigger point that I want to bring in is considering the macro environment here. Throughout all this time period, while we do love these data science models, and I think they're going to continue to hold true to a large degree on finding good discount opportunities for Bitcoin, it is important to note that essentially we have never gone through a true global 40-50% bear market in equity markets when it comes to crypto, i.e., we haven't gone through a real recession as cryptocurrency markets have been liquid and tradable. The last significant one we really had was in 2008. We've had, bear market sell-offs in equities of 20 to 30%, much less severe than that in crypto, of course. But we haven't had a 50% plus correction in equities and have crypto markets be a liquidable, tradable market. So we can't simply just go off of data science models when making our decisions to call whether or not this is the bottom or not. And it's certainly, if we're just taking a look at price here, folks, this is not how a bear market low really looks. And especially if we chart back up here to $30,000, that's certainly not what we usually see in the past. But it's okay. We're going to be taking advantage of this strength here. We're going to be selling off into that strength. And again, one other key sign here, because we take a look at our partner here. This is Bookmap, as many of you know, one of our partner tools here on the channel. And I got to say, Bookmap really tells all here. If we take a look here at the cumulative volume delta here, we are seeing it tick up a little bit here, definitely showcasing that the bulls are in charge. You usually find this on rallies to the upside. But what's really telling about this is that over time, the market order flow, or the CVD, is really not as high as it should be for a move here from 21,000 to 24,000. That's a $3,000 move here for Bitcoin's price, roughly speaking. Yet the CVD during that time is really quite low because of a lot of volume dots here. When market order flow starts to flip bullish, we get a major amount of sell side pressure into the order book. Now, what is this telling of here? Because during a bull market, we would usually want to see cumulative volume delta accelerating much higher with price, meaning that people are market buying, they're kind of FOMOing in to positions. And on top of that as well, very limited ask resistance on the order book as most of the sellers have been flushed out. Well, what we're seeing here is the counter opposite. We're seeing relatively weak cumulative volume delta, i.e. buying pressure through market orders. And we're seeing not only lots of heavy sell side pressure, right, on the CVD, weighing down that metric, but we're also seeing bids getting filled here. So when someone is market selling a dramatic amount and we don't see price drop significantly, that means that bids are getting filled in the order book, essentially limit orders. So what this means, if we're understanding it metaphorically, is that whereas in a bull market, we have a lot of people market buying with optimism, taking the best available price, and just making sure they get their position filled. The only buyers coming into this market here in a substantial way are people getting their bids filled on discounts. They are not looking to just market buy and drive up prices. This is a sign of a relief rally. The people are only willing to take an opportunity to get into Bitcoin on a dip here in this very weak market order flow that is not enough to sustain a long-term reversal. In fact, what we're seeing here is that when market buyers come in with optimism in the market, there is a pretty decent degree of sell side pressure here coming in to meet that optimism. So again, price can still accelerate higher here, but as we move higher and higher, I can bet you money we are going to see the CVD here slowly but steadily start to showcase signs of neutrality, showcasing that there is an equitable amount of sellers in the market who are taking profits from this relief rally, who are being smart. They're not getting caught up in the emotions, and they're taking their positions off the table. All right. So the lesson here is this. Over the next coming days and weeks, we can continue to see some serious upside in the market. I don't doubt that. We're calling for around $27,500 to $30,000. We think that there is more upside to come, but be ready to get in and out of the market quick. And if you already have positions that have benefited from this rally, take profits along the way. I can guarantee it to you guys to some degree, it will pay off in the future. It will feel good to be able to protect your capital in this environment. It's the same reason why so many people, unfortunately, took a lot of pain throughout this bull market because many people, like ourselves here on the channel, thought that it was just going to go to 100K, it's going to go to 200K. We have to be smart with our capital. We have to be protective and really get prepared for the next opportunity and the next go around. So that's it for today's video, guys. Thank you all so much for watching. If you like this video, consider dropping a like and leaving a comment down below in the description or down in the comment section what you think. But I've rambled on long enough. I'm going to give you guys the rest of your day back. Hope you have a wonderful rest of your day. And until the next one, I'll see you all in the next one. Take care, everyone.